Ladies and gentlemen, gold prices has been going up insanely, exponentially, and wonderfully for many people and frighteningly for some people. But I think it is important for us to understand why the gold prices are going up and what are the events that can cause it to crash, because historically gold prices have crashed before. So today I will seek to share with you some of the analysis, what I think would cause the gold prices to crash, and see whether it is likely in the time to come. Let's watch on, shall we? So gold prices have reached unprecedented heights so far and is still going up. And the whole world, including governments, individuals, retailers, women, men, all rushing to buy gold. The queues behind all the gold retailers are going in long, long, long lines. And today we shall analyze what are the forces that's driving the prices up, and more importantly, what are the events that can cause it to crash. I think it's important for us to know that. So as usual, this content is for education and entertainment, not financial advice. Let's go. So since 2015, gold prices has been going on an incredible rise. At that point in time, gold prices per ounce was only 1,115, $1,150 per ounce US. And in COVID, it went up to 1,800, and it rose further to about 2,000, and now it is at an astronomical 4,250. So gold has tripled in a decade. I suspect that it is on par or maybe even better than S&P 500 for some part of the time. So does it mean that we should all rush in right now because gold will just go up higher and higher? There are five forces that are driving gold prices to record high. Number one is we are expecting an interest rate cut. An interest rate goes inversely with the gold prices. There is a runaway debt across many governments right now. Sovereign debt across the world right now is reaching $310 trillion, and it's a frightening level. Geopolitical tension conflicts right now are driving these gold prices up higher and higher. And China, especially, China's central bank has been buying gold at an astronomical level, and that's driving other banks to buy as well. And of course, institutional retailers, after see all this rise, are all rushing in as well. Just homing in on this topic of sovereign debt, government debt, they're right now $310 trillion. It is not just the US. Many governments are having heavy debts right now. And the debt to GDP ratio right now is about 125%. So that's not just happening in US, that's happening in Malaysia, that's happening in Europe, that's happening everywhere. Probably the only country that has almost no debt is Singapore. We do have some debt, but those debt are issued more to stimulate the bonds market and improve the financial institutions. So it's not really a debt. So right now, it is something that is a real concern. There's a lot of geopolitical tension across the world right now. There's so much war that's going on. Ukraine-Russian war that's going on and doesn't seem to be an end. Middle East instability has just kind of ended and then it resparked off again. Right now, it's kind of ended again. We don't know when it's going to take off again. Between US and China, there's a trade war that is still going. Start, stop, start, stop. And of course, right now, we have a lot of tension, not just between these countries, but between China, Philippines, and so on. Just so much tension. And whenever there's tension, gold prices go up. China is trying to do what we call de-dollarization, meaning is depending less on the US dollar. They have been buying a lot of gold and trying to shift away from US Treasury. And as much as they de-dollarize their dependency on the US dollar, and they clearly have to buy something more reliable, and they bought a lot of gold. And as a result, many other countries, monkey see, monkey do, also follow. So it is the wise thing to do, because if someone is buying, you better buy as well. As a result, right now, it creates a huge demand for gold. Just for general education, why gold is a superior asset? There was one saying that, that diamonds are forever. Well, not anymore. diamonds were forever. Ever since the evolution of lab-grown diamonds is now cheapened to almost like 1 to 2% of natural diamonds, right? People right now can buy the same exact diamond with certification at maybe 1 to 2% of the natural diamond price. And as a result, diamond prices just collapse. And companies like De Beers are now on the edge of bankruptcy. But gold, on the other hand, has no substitute. It is an elemental metal, and it is right now highly demanded by all institutions and individuals. So gold turned out to be the ultimate asset. So it is a timeless standard that has survived through the test of time across time since probably ancient Jesus time or so. You have got an ounce of gold persistently able to purchase the same amount of things, and right now it's still the same. And fiat currency right now is eroding, and gold clearly is an alternative. It is a symbol of trust and permanence. Now, there are many ways to buy gold. Some people like to buy 999 gold bullion, and these are gold coins or gold bars. You can buy them from, I think UOB sells them in Singapore. I don't know about in Malaysia, but many banks do sell them as well. Uh, and you can actually buy them without GST actually. Uh, but you can also buy 999, 916 gold as a jewelry as well, right? So to many ladies, they feel that, why the hell do I want to buy gold and keep it in a cupboard? I cannot feel anything, right? So they buy jewelry, gold as well. So you get preservation of value and appreciation of value plus aesthetic value as well. So that's also something very interesting. I've got a lot of premium customer that bought so much gold from us whenever we do Taka Jewelry live stream, and they buy at some wholesale price. That was amazing. And you can also buy paper gold. You buy gold ETF, they're highly liquid. You don't get to touch gold, you don't get to feel gold, you don't get the joy of it, but you get gold as an investment. And the alternatives like mining stocks as well that you can grow as well. So there are many ways that you can own gold or part of gold. Just to share with people what's the difference. 916 and 999. 999 is often known as 24K gold, and 916 is known as 22K gold as well. 999 is a bit softer and closer to spot price, more preferred by institution, and 916 is harder and better used for jewelry. Both are still very popular. Now, if recession were to hit, generally there will be an interest rate cut. Okay, and whenever that happens, the gold price tend to shoot up. So gold tend to be a inverse relationship with interest rate, and right now we are looking forward to interest rate cut. Looking at the history across 100 years, let's see how the gold prices have been during the Great Depression. Gold prices shot up by 75%, the duration of about 11 years. So during the Bretton Woods system, it was actually flat because it was gold parity, but suddenly there was a breakaway from the gold standard, and then the gold prices shot up 2,300%. That was crazy, right? Paul Volcker days, the U.S. Central Bank, the gold collapsed in price. Okay, collapse. So it went down by 70% for 20 years, 19 years to be precise. So it can happen. How they happen? When interest rates spiked up really high. When quantitative easing begin again, then gold prices will shoot up again, and then and so on, right? So you can see gold prices do go up and down, up and down, up and down. Now, I would just say this, that gold bull market tends to be longer than the bear market, okay? And underlying it is when gold hit with some particular situation, such as a high interest rate hike, they tend to collapse in price. So we shall see whether what kind of situation will emerge in the near future. So when and why gold prices fall is when real interest rate, real bond yields actually exceed gold yield, right? So So that's happening whenever interest rate goes up, and generally it's an inflation environment. When the US dollar become very strong, the gold prices tend to do badly as well. When there are peace and stability, that's where people felt that there's no insecurity anymore. They tend to buy more gold. I don't think we'll see peace and stability for some time, but maybe Donald Trump can work some magic with Russia and Ukraine. Maybe something is coming there. And when central bank sells gold in a massive way, we don't see it now, but in 2013, IMF sold a lot of gold. So when will this kind of peace scenario happen? Well, it's hard to say, but if they are short, let's say there's a war that ends, let's say Russia and Ukraine have peace, then between 0 to 6 months, gold prices tend to fall, okay? And then after that, it tends to strengthen and then stabilize, and it depends what happens after that. Are there other downsides to monitor? Let's look out for interest rate hike or US dollar suddenly become very strong. Can it happen? Yes, if Donald Trump do something special. What is it? I don't know. And of course, if the central bank stop accumulating gold, then gold demand could drop. So it is possible for gold prices to come down. And I would say that at this juncture, it is uncertain for a few reasons. Number one, Russia and Ukraine, are they going to stop fighting? There's some signs they will, some signs they don't. Hard to say. And if suddenly China needs a lot of money, they could sell their gold, and then that could spark off another gold crash. My take is this: at this juncture, if you want to buy gold, I would suggest that if you want to buy gold, enjoy the aesthetics of it as well, so that in case the gold prices go down, you still get to enjoy it. So if you like it, your wife like it, whatsoever, just have some jewelry kind of gold. Yes, it does not yield so much value, but at least you get dual value out of it. Buying paper gold and gold bullion, yes, you probably have more preservation of value, but it's hard to say whether you will continue to go up. If you really want to use gold as an asset, allocate a small percentage of all your portfolios and not a big one, because gold is tend to be an alternative asset for diversification, and try to use 999 gold, 24K gold instead of the lower K gold, and you have to hold it for a long period of time. Long period of time, I think gold tend to go up, but if you have a 6 month, 12 months, 24 months time horizon, then gold is the wrong asset to go. So with this, I think that not all that glitters is gold, but gold certainly glitters. And at this juncture, I would suggest that let's watch and see. Gold is a wonderful thing to touch and enjoy. Across the years, people love gold, and so do I. So let's watch and see what could happen. And I'll see you tonight in the live stream. Bye-bye.